You're watching Biz News TV. I'm Bronwyn Nielsen, and it's currency focused time with Andre Cilliers from TreasuryOne. Andre, let's talk to the Rand, obviously being buffered by international news flow. And certainly, if you look at Fed Chair Powell not putting any panic into the market, given the virtual Jackson Hole meeting that took place last week. No tapering, immediate tapering in sight.
No, good afternoon. No tapering immediately in sight. And yes, you mentioned that he's not instilling any panic into the markets, but sometimes I wonder whether the stability that he pronounces or announces on interest rates is not the instability that people are looking for or concerned about, because inflation is still way above target levels. They keep on insisting that it's transitory. My problem is that, as long as it stays there and it stays there too long, then I make the comment that it might be applying for political asylum and stay there permanently. And that's a bit of a concern. You can deny it for so long, but if it persists, then eventually you will have to do something about your interest rates, about your monetary policy, and tightening it up to contain that inflation. And when we look at the labor market and the salary increases that's being offered to people to come back to jobs, then that's not inflation that dissipates very quickly in markets.
Would you look to, if you were in control of the US interest rates, would you look to raise interest rates earlier rather than later?
I would certainly be looking at it.
Concern over inflation.
Yes, I would certainly look at it a little bit earlier. Keep on insisting that they will look at it in 2023. That's a very long way off, and that's a very long time to sit with inflation in your country that's above your target levels, and with interest rates that is way below your inflation rate. So I would certainly, instead of making all the noises and all the words of saying I will not change monetary policy, rather move to the stance of we will carefully watch inflation, and if it seems to be continuing at the same levels for a considerable period of time, we will adjust monetary policy accordingly.
Would that statement not create panic across the board?
Well, panic, yes, it will. I don't want to say it will create panic. I just want to say that would adjust levels in the market and give people more certainty as to what, and make their adjustments over a period of time, rather than waiting for it to happen at one specific day. Massive moves. I think it's far better managing the process than waiting for a shocker.
Well, given the statements, we are now in a risk-on environment, which means that emerging market currencies look all the more attractive. We obviously have our own issues here in South Africa, and you'll be keenly watching for any signs of additional looting and rioting. We have heard an undercurrent of murmurs. This must be a key area of concern when it comes to South Africa specifics.
It is, because just ago, we had deployment of police and defense force again. And messages going through that there will be a second round of looting and unrest in the country. Nothing came of it, but it still distracts from what they should be doing, and that's growing the economy, running their businesses. They still spend money in the wrong areas because they spend more and more and more on safety measures and security measures than what they actually can spend money businesses. And that's a concern. And we continuously have to watch this. We're still seeing that people are being arrested, but nothing really comes from that You know, you get arrested today, you're out on bail in 2-3 days later. We all know how social media works. You can open an account under another name and you can start spreading these things again. So it's something that we need to put to bed. And with elections that come up, and we're still waiting for the Constitutional Court to make their call on whether it will be postponed or not. But with that coming up, it could spell further. Because I think the climate between political parties is not what it should be, and that havoc. Apart from that, we have, as far as I'm concerned, a little bit of turmoil within the ANC. You know, you have political parties attacking the ANC because they're not paying salaries. You know, there's funny things that comes into play, especially during an election period, although it only be elections, can spell turmoil and trouble into the country.
So beyond the politics of South Africa, somewhat tumultuous, looking at the data points that we've seen on the local front and their impact on the local unit, although of course we do know that the local unit, as I said earlier, is at the mercy of international news flow, really. But talk to me about the data points you've been watching.
Retail sales in South Africa came out just above 10% 2 weeks ago. Us that there is some growth, some demand coming back from retail spending from the consumer, and that they are rearing their heads and showing their faces again in shops and buying and spending money. That's a good thing. That will aid businesses. We are seeing the rebasing of the GDP figures, and that the economy is in actual fact 11% bigger than what expected. We must just keep in mind that if that is the case, then the growth figures that we're going to get and coming forward for second and third and fourth quarters this year will be based on that higher figure of GDP. So the figures of growth could be a little bit lower than what was anticipated, simply because the base is bigger. But certainly growth is coming back in South Africa. We have inflation that's well controlled, lower again. We are petrol price increase this month, a decline in the diesel price. Now the diesel price decline is in the sense that a lot of the logistical companies, you know, has got a very high spending in diesel, so that helps and will contain inflation even further. And with our inflation rate being actually out of the US, you know, had a situation that the currency needed to weaken because of inflation rate differentials. We could actually now say that we need to strengthen the currency because our inflation is lower than that of the US. And it's been like that for quite some time. I do not think that our central bank will in any way budge lower interest rates at this stage, but it simply means that they have room to keep interest rates level at the same level where it is now for a longer period of time, which is a very stable environment and also is good for growth in the sense that your housing sector could sit with stable interest rates at low levels where we are currently for a longer period of time, and that could boost demand in the markets, even in terms of retail spending.
Andre, we can't have a currency discussion without talking about the Delta variant and the impact that the lockdowns, the new wave of lockdowns, may have on economic growth globally. You look at Auckland, for instance, Jacinda Ardern, the President of New Zealand, the Prime Minister of New Zealand, saying that they're going to go into another 2-week lockdown in Auckland. Is it just a matter of time before we see this snowballing across the globe?
Well, yet again, we've seen that they've just announced that there's a new variant, C.1.2 or something like that, that came out, that's under investigation to see what the infection rate of that will be. Will the vaccinations be effective against that, or will it render the vaccinations neutral against that variant? But at the moment, if we look at the figures in South Africa, the Western Cape seems to have stable. stabilize at these levels and actually coming down a little bit in terms of infection rate. KwaZulu-Natal still on the uptrend, but also a slower uptrend. Rest of actually under control, and if I look at the positivity rate of tests, then it is slowly coming down. So I do not think that we will have further lockdowns, but we do not know when a fourth or a fifth wave could hit the country. I think the government has learned how to manage it and trying to manage that without trying to too much, and I think they will continue on that path. But we never know with the variants that develop within the COVID-19 situation. Vaccination program is on track and going well. So I think that will also reach a level of stability of some sorts.
Let's talk ranges on the rand in terms of what you are anticipating in the medium term.
Well, for the year end, I still think we're going to end the year between 1420 and 1470. That might seem wide, but with our currency, 50 cents is not really a heck of a spread. And if we look at where we're currently trading, then we slab bam almost in the middle of that. So I think we're in for a period of stability for the rest of the year. And if we don't see any surprises out of the US and we don't get any surprises out in terms of political scenarios, in terms of looting, etc., then I think we could be stable 4 months lying ahead of us going into the year end and remain within these ranges.
I do want to play those scenarios out, though. So if we do see surprises, firstly on the international front, and maybe it's geopolitical risk, although we do see the US pulling out of Afghanistan at this stage, geopolitical risk could, of course, lead us to a risk-off environment. What would the impact be on the local unit then?
If we go into a full-scale war, which I doubt we will go, I think they will continue with the withdrawal of troops. I think there might be a strike here and there, another drone strike or like we've had over the weekend, but I don't think they will go into a full-scale war. If they do, we will have a risk-off scenario throughout the emerging market. We could reach the 50. Similarly, if we have an announcement by Mr. Powell that there is going to be interest rate increases much, that will also possibly make us breach. And the same with our local situation. If we have a full-scale looting scenario again, same as we've had, we might reach the 15 level again. So that's the upside risks. I do see that it's fairly contained to happen, but that's the scenarios. On the positive side, not much.
On the positive side, not much, but let's talk to Minister Godongwana, South African Finance Minister, and what you're hearing coming out of Treasury. Are you relatively satisfied that all is as with the policies that were instituted by Tito Mboweni? No big changes, nothing that we need to be worried about?
Nothing worried about. Yes, there's people that delves into the past and look at what happened some years ago with a problem that he had, which he had repaid some of the money, but I think that's in the past. He's making the right noises at the moment, but not too much noises. He's fairly quiet, not making any waves. He's going to have I think, a quite pleasing time during the medium-term budget speech next month. I think the fiscus is getting some windfalls from higher profits from all around in the economy, most companies. And so he'll have an easy one on that side. We will have to wait and see what happens to the 2022 budget, because that's where he will get his chance of changing things and on what he thinks should be done in the economy. Up to then, he's got an approved budget that he work within that and not make any waves.
Andre, also we need to talk to the commodity cycle, and having just spoken to Neil Froneman, the CEO of Sibanye-Stillwater last week on the announcement of their results, there's still a positive sentiment out there that we are in a commodity potential super cycle. And that, of course, underpins the local unit, the rand, significantly. What attention do you give the commodity space when it comes to the currency?
We are a commodity country. It forms a very, very big part of our exports. It forms a very big part of our economy. And so, if commodity space and in an upward trend, then South Africa will get the benefit from it. Will get the benefit from it because mining bigger profits. And with is that the world economy will continue coming out of it. It will continue with growth. Growth will become more and more stable as we move ahead, and that will create and sustainable demand for commodities. So I do not think that we have under any threat or serious threat for the commodity space. And I think that will continue supporting the country, trade balance figures, and, as I say, profits for mining companies, and hence again, the fiscus benefiting from that.
Andre Cilliers, appreciate